Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times. Hello, and welcome back to the Fintech Times News and Views podcast. And this week, the gang is back together. All three of us are here. It's been a couple of weeks since we've all recorded together due to various things and others, so it's so nice to have you guys back on the podcast.
It is good to have everyone here. I'm loving the energy to get us back into the swing of things while we're all back here. And I've had a couple of weeks missing one of you, so yeah, it's good to have everyone back. And I think we've got some really interesting topics to delve into as well this week.
Yeah, I was going to say you've been consistently in, and it's me and Francis that have been slacking.
I've had to put the podcast on my back.
Yeah, absolutely. But Francis, how are you doing this week?
Yeah, I'm doing much better this week. Unfortunately, I was quite unwell last week, so I wasn't able to make the podcast, but back in good health now, and I'm looking forward to the conversations that we've got today.
Epic. And I bet today is going to be a good one, because what are you guys going to be speaking about this week?
So today I'm going to be talking about customer experience being the main factor that makes consumers want to switch bank accounts and banking providers.
Awesome. And Tom?
And I'm going to be talking about why some fintechs and banks might be taking a step away from the buy now, pay later space.
Cool. And I'm going to be looking at Mastercard's new open banking powered subscription management service. Anyone want to kick it off today? I'm looking for volunteers.
I'm happy to.
Go for it.
Yeah, so as I said, I'm going to be discussing customer service and how it's really, according to this article at least, still king, as 40% of UK consumers stay with banks despite switching incentives. So a lot of the time, I think, we always see these new deals and offers coming from banks sort of trying to lure these customers from their competitors away and, trying to build up their own reputation with new consumers. And a lot of the time, you see these new offers coming out and you think to yourself, is this going to be worthwhile? Or is this sort of just going to be a one-trick pony, sort of I sign up, get that money, or whatever it might be. Normally, it's like a £100 incentive or something like that. So you get that money and then you think, actually, I've made a terrible decision. This bank doesn't care about me at all. And you're kind of stuck with them and it just becomes a pain to try and switch again. So the article that I wanted to discuss today is all about sort of customer service and customer experience. And it's research from Odigo has revealed that 40% of UK consumers switch banks for customer service, while 47% realise they are missing out on a better deal with someone else. So the main thing that I thought was really interesting was that financial expert and consumer champion Martin Lewis claimed that anyone with a bank account risks losing around £200 by not switching. However, the Odigo research shows that 35% of consumers believe they don't lose money by staying with their current provider, while 40% of consumers also cite strong reputation and trust as another key reason to stay with their banks. At the other end of the spectrum, poor customer experience was named as one of the top reasons to swap providers by 35.7% of consumers, and around 37.4% named better interest rates as reasons to stay. So I wanted to really discuss with you guys today, what would make you want to switch bank account providers, or what has made you change, or what has made you want to stay with the ones that you're at right now? Is it the good customer service? Is it good interest rates? Or what is the biggest thing, do you think, for consumers? I mean, obviously it's subjective to different people. Some people would rather a financial incentive, whereas some would rather better customer experience. But I wanted to see what you guys thought. What is the biggest factor that makes you say, yeah, this is going to be my banking provider? Polly, I'll go to you first.
Yeah, I think this is a really interesting question, this kind of idea of customer service versus, I guess, money and incentives and things like that. I think for me, it does boil down to probably both partially the incentives, because switching bank accounts to get just a free 200 quid, you can't really go wrong with that, to be honest. Free money, who doesn't love free money? So that would definitely sort of weigh into my decision. But I think for me at the moment, I'm in the stage of my financial journey where it's all about kind of the services and the interface that is offered to me. So I have had a bank account since I was 15, and I've still have that bank account right now. It's with one of the traditional big banks, blah blah blah, and I've had that bank account forever. But I now also have about like 3 other bank accounts that I use to manage my money. And the way I pick those is through kind of what services they offer to me. So like I really like being able to like have my money in little pots, rather than having to open like a new savings account. I love the pots feature that loads of challenger banks have, which is something that I do not have with my original bank account. Like that is just not a feature that is there for me. And so it's things like that that actually make me look at and want to move bank accounts. I've never done like the switch, when you completely switch your sort of main current account to a different bank account to get the financial incentive, because I don't know why. I just never have. I'm a creature of habit. I like things easy. And I know it is very simple because I know we've talked about on the podcast before how easy it is to switch and like the switching services that are available to you and all the rest. So switching bank accounts is actually very simple. But I'm a creature of habit. I like keeping things the way they are. But I think it's very interesting, this idea of customer service, because to be honest with you, I don't think I've ever had an interaction with my bank's customer service team. I guess, it depends what your definition of customer service is. But I've never, in terms of like my online, obviously, like I've been in branch and spoken to someone there about various bits and pieces, but I've never actually needed to contact a customer service team about any issue, and very rarely speak to anyone at all. So I don't think that would necessarily come under my sort of consideration for whether or not I was going to switch bank accounts. But maybe more people do. But I guess because the financial products that I have are just very much just bank accounts, current accounts, a couple of savings accounts, nothing too crazy. If you have, a credit card or a loan or other financial product, maybe you would need to speak to someone a bit more and access customer service and all sorts of that things a bit more. But it's a really interesting thing, and I think it's all one of those things that is kind of, I guess it varies from person to person. I think it's interesting the article mentioned Martin Lewis, because I think he's doing obviously some great stuff at the moment to help people during the financial crisis. And I think he's right. If you get a free 200 quid, what is, I don't see an issue with that. So I think this research is really interesting.
No, definitely, and I'm with you as well. I've had the same bank account since I was a kid. I haven't changed this, like you said. It's with an incumbent, and I've definitely been looking at the switching services because I've sort of thought to myself, is this really the best thing that I've got available to me? All the selling points of my current account, if you will, I don't think they're things that I use very often. And I've looked around to see what other bank or banking services are offering, and they seem much better. And it seems like, for me, it is that financial incentive, to be honest. I think I have definitely had customer sort of experiences or with my bank accounts in the past where like my card has been declined for a reason that I'm not sure, and I've had to call them up. And I remember I was at this is when I was at university. I was at ice hockey training, which used to go on at ludicrous times in the evening. It was, I think they used to start at like 11 p.m. and finish at 1 or something like that. And I remember I had to call them up at, I think it was like 11:30 at night, and they actually responded, or they picked up the phone, and I was able to sort of fix my card. And for me, that is really good customer experience, to be able to sort of have that, at that late at night, and sort of be able to respond and sort out the problem there and then. It was really, really helpful. But, saying all that, I do think incentives and sort of financial savings and stuff like that, or where you do, like you said, get free money, I just think that is a bigger, or for me at least, it would be a bigger selling point, and would definitely make me want to switch. What about you, Tom?
Yeah, I think I'm in a really similar boat to Polly in the sense of I've got the really basic, I've got my basic bank accounts, my savings accounts. I've still using the current account that my mum set me up when I was probably 13, 14. And I think the main reason for me is that it hasn't caused me any problems. And I think that's quite a low bar to have. But if I haven't had any bad experiences, I'm like, well, I don't have any issues with how things are going. My money is in a, I feel like it's safe. My savings accounts are doing me okay. I recently went to sort of change my savings accounts maybe 6 or 7 months ago. I think I was kind of inspired by a conversation we had on the podcast, and I was like, you know what, I need to sort of get my stuff together and really make sure that I'm getting the best deal for my savings. And it turned out that I already was basically in the best kind of situation, so I just stuck where I was. So yeah, I think there are times when you do need to keep checking, because so many new offerings come from banks on a regular basis, and it's good to be aware of the opportunities that are available to you, and the sort of different rates that become available. But yeah, certainly for me, I think from a personal perspective, it's just all about being comfortable, and I'm not looking for any crazy features. And I'm sure that there are features that if I looked into, I'd be like, oh, that would be really helpful. But for me, I'm probably the sort of I'm the most bog standard customer for banks, in the sense of I just want somewhere to store my money, have savings accounts, get a bit of an interest rate, and maybe it is the case that once I start looking to use more types of services from banks, that then I will be looking to switch. But yeah, while the financial incentives are nice, I think for me it's almost the fact of, because I haven't had any problems with my bank for 10 plus years now, I'm almost thinking, well, for the sake of £200, do I want to potentially get myself into a situation where I'm going to join a bank and have issues that I haven't experienced before? So for me, it's more of a comfort thing. It's potentially a little bit lazy. I don't want to change because it might cause me problems in the future. But yeah, sometimes I think the financial benefits are, I obviously they'd be nice, but it's a case of, well, I'm happy where I am. I haven't had any issues, so I'm going to stick where I am.
Well, if it ain't broke, don't fix it, right?
Exactly.
But I don't know. I see where you're coming from, but at the same time, for me, I think, what if, well, like you said just now, you're after pretty simple stuff. You're not after anything crazy. But what if there was another financial service that did have a good or a banking service, I should say, that did have a good reputation, but was offering much better interest rates and so on and stuff like that? Then surely that would probably make you think, actually, am I in the right spot? Is it worth changing? I don't know.
Yeah, definitely.
Food for thought.
I think, yeah, I think you're right. If there's something so good that you think, well, I can't afford to miss this, most people would change. It depends on their situation, what that sort of bar is to make them think, oh, that is worth switching. But yeah, I think for me, yeah, like I said, I was willing to switch with a really good interest rate. It just turned out that where I was, actually, I was already getting pretty much the best deal for my money. So yeah, I think there's like I said, it's just good to be aware of the sort of deals that do arise, and as long as you are willing to make the switch when the time is right for you, then I think you're always going to leave yourself in pretty good stead.
Definitely, definitely. Well, I think it would definitely be sort of an interesting spot to keep an eye on, and sort of, I guess it'll be interesting to see how sort of consumer attitudes change over time, because guaranteed this probably won't be the case in 10 years time, or maybe it will be even more so the case that customer experiences, 80% of people are saying it's number one. But we shall see. We shall see. Tom, why don't we go to your article next?
Absolutely. Well, for my article, we are staying in the realm of banking, and the article that I'm going to talk about was inspired a little bit by some of the discussions we've had on this podcast before about the sort of good and bad sides of BNPL. We've obviously discussed quite a lot about how Klarna's almost slyly rebranded itself as an AI-powered shopping assistant instead of an out-and-out BNPL firm. Why that might be. We've had discussions about BNPL firms closing down, and just like the overall level of uncertainty surrounding the space and the different factors causing that. But last week, NatWest revealed that it was going to be closing its buy now, pay later proposition for its customers, and is going to put enhanced focus on helping its customers spread the cost of their purchases through its sort of offerings like credit cards, overdrafts, and loans. And I think just whenever a big bank like NatWest in the UK cuts its losses in an area, I definitely sit up and take more notice. And basically, it's just led me to ask, why are they giving up on the space so quickly? Because I think it was just under 2 years since they launched the service in the first place. So they haven't given it a huge amount of time, long term, to see how it progresses. But speaking to some industry experts, some potentially key factors as to why they're taking this step back from BNPL came up. And really, I just wanted to discuss with you guys, what you thought the sort of key reasons for this sort of step back away from BNPL for many firms could it be. But just sort of recap what some of the experts said. Some were saying basically that the market has become overcrowded, meaning it's tough to make much, if any, headway when it comes to increasing the popularity of a new BNPL service. Especially when the likes of Klarna have become so popular, and now they're sort of in a position where they're generally the sort of first thought for people who want to spread the cost of their purchases. Also, most of the people who haven't dipped their toes into the space yet are still maybe influenced by this negative reputation that surrounds the space. And, another thing that we've discussed a lot is the lack of regulation around BNPL in the UK, which just isn't particularly comforting for the people who are looking to enter the space for the first time. And one other factor that I maybe hadn't previously considered was the idea that because there's this idea that BNPL kind of goes hand in hand with the hidden late payment fees or other less transparent areas. And I know we've discussed before about whether that's true or not. Um, there's this idea that sometimes certain BNPL offerings are just out there to take advantage of you and get as much money from you through these hidden fees as they can. And because of this, banks might be less happy to be associated with BNPL. They might be a bit worried about brand image if they're seen to be offering BNPL, which is in many cases seen to be almost predatory. Is that going to hurt their sort of reputation when it comes to helping their customers? But yeah, I'm conscious of nattering on for a little bit too long. So I kind of want to ask you guys what you think about this. What do you, or why do you think the likes of NatWest are discontinuing efforts in the BNPL space? Is there a specific area that you think is most key? Polly, I'll come to you first.
You know what? I think it's down to a whole host of reasons, but my main thinking is that fintechs have just done it too well. Like, I think fintech really got buy now pay later and really just ran with it and made it a really good product. And I think a bank trying to keep up with that, I think, is just always gonna fail in some way. Maybe that's too drastic and too dramatic to say, but obviously when you've got things like Klarna, which I know you said obviously are moving on to other things, but when you've got such a saturated market of different buy now pay later providers, for a bank to come in doesn't really fit, I don't think. And I think especially when you think about the general age of people who are using buy now pay later generally skews younger. I think they're more likely to be going with these fintechs, these newer things, rather than looking at a traditional bank service. So I think that's kind of one of the main parts of it. And as well, I think, I mean, I guess coming into that as well, I think the one of my main things as to why banks are sort of falling out of love with buy now pay later, and maybe in other companies are sort of moving on, is generally, this is like my conspiracy theory, is that PayPal are doing it too well. Because obviously you've got PayPal Pay in 3, and I think they have a couple of other different sort of variations on there. And everyone has PayPal. I think pretty much everyone I know uses PayPal to pay for things because their marketing is so good, and they've made it seem like PayPal is the absolute safest way to spend your money. So if you're buying things on Facebook, you'll do it through PayPal. If you're sending money to your friends and family, you probably do it through PayPal. Pretty much everyone has a PayPal account. So it's too easy at checkout to click PayPal Pay in 3. So this is kind of my little conspiracy theory about why buy now pay later is sort of dropping off a little bit, because PayPal are just doing it really well. And when you've made yourself the payments company anyway, it's like it doesn't make a lot of sense. But yeah, I think it's just down to regulation. I think has to come into it as well. I feel like you have to talk about that in some capacity, because obviously we're still waiting for the Financial Conduct Authority to give us something when it comes to regulation, and we still haven't had yet. And I wonder if banks are less keen to get in on something that isn't fully regulated just because of what it might necessarily do to their image if something should happen, or if anything like that goes. And I think buy now pay later generally has a bit of a marketing issue. Maybe that's not the right way to put it, but I think there's certainly reputational issues when it comes to buy now pay later, which we've spoken about before. Whether those reputational issues are deserved, that's not necessarily what we're talking about. But I think, there's a lot of discourse and a lot of buzz around buy now pay later, both good and bad. And I think that's just a something that maybe banks don't want to get into. But it's a really interesting space, and especially with sort of, with what was it? Who's closed? OpenPay halting operations, and then Klarna moving out of it. Blah blah blah. I think it'll be really interesting to see what the buy now pay later space looks like over the next 12 months. And I know we say that about everything, but I think in this case it's absolutely true, because I think a lot of things are gonna happen, and whether they happen well for a good reason or happen for a bad reason, I don't know, but it's genuinely a really interesting place to watch.
Yeah, I'm really interested to see what people think about your little PayPal conspiracy theory as well. I think that's an interesting point. And the first thing that makes me think of is the idea of, you know, when someone's doing something so well and they've established themselves as a leader in that area, you don't tend to look elsewhere. And like I said, you know, for many people, their first thought when they're looking to split payments is Klarna. Like you said, PayPal are also doing so well in that space. Was the sort of pay and free idea, and I think it all comes back to this idea of, you know, just the main idea of trust. If you trust that they're going to do the service well, it's going to be seamless, it's going to give you as good an offering as you need and as you believe that, you know, can be offered to you. You're not going to go to, you know, even if a bank that you trust like NatWest goes into the area, well, you're already getting a service from someone else and they're doing just as good a job. So yeah, I think it's an interesting area that even the banks that, you know, we speak about so often they kind of stay ahead of fintechs because of the trust that they've built over this long history in the banking space. But when there's an area that kind of gets, you know, a newly born area like BNPL, actually certain fintechs, you know, the likes of Klarna and PayPal can dominate in the space and become the sort of figureheads for that. And it means that banks can't really make the headway in that space. So I think that's a really interesting kind of idea to think about. But Francis, what's your take on this?
I kind of agree with what Polly was saying before, which was that it's almost like a marketing thing. I think it's a real image thing. I think when people say BNPL, I think a lot of the time they think, oh, debt trap or scary times with money. I don't think it's always necessarily got the best connotations to it. But saying that, I don't think a BNPL offering necessarily is the problem. Because, yeah, sure, while NatWest has announced that it's closing its BNPL offering, in the space of 2 weeks, I think or just at the end of February, we actually saw American Express launch a BNPL-esque offering to the UK market. But it wasn't called American Express BNPL. It was called American Express Planet. And it just having that different name, I think, is a big sort of marker and indicator and sort of saying we are going to offer something like this, but in not using the same name, I think it does create that bit of distance with perhaps the bad press that BNPL is getting. I do also think that regulations play a massive part in it. I think fintechs probably have more or can play the riskier game of going into an unregulated market, whereas of course incumbents have this huge reputation and they have this huge, well, they have the weight of everyone's finances on their shoulders, really, and they can't really risk playing a risky game where it's like, oh, is this going to be profitable and is it going to make our services better, or is it just going to sort of take up resources and not really pay its dividends? And because of that, I think that we're not going to see BNPL go away in the slightest, and I think that in fact probably more companies will look back into it as well. I don't think it's a case of, you know, one and done. I think there will be sort of entrances into the space again, but I think it is going to take better regulation before we see that. And I do think that once they do come back, I think it is going to be under a different name. I think there is going to be that disassociation with traditional BNPL as we know it.
Yeah, definitely. I think, like Polly said, we say it a lot, but it's just going to be a case of, you know, seeing where the space does go in the sort of near future. But yeah, I think it's a really interesting time for BNPL because of this sort of level of distrust. And yeah, I think you raise a good point. There's definitely an opportunity for growth in the space, but maybe it will just take that level of disassociation and almost a rebrand or a remarketing of it to make people think, oh, this is different, even though it's the same concept. It's actually a different area, and that might be important in ensuring growth in the area. So we'll just have to wait and see. But with that in mind, last but not least, why don't we move on to your story, Polly?
Thank you very much. So I wanted to talk about today. Mastercard has launched a new smart subscriptions solution, which is powered by open banking to help manage subscriptions within consumer banking apps. So essentially, it offers you like spend analysis, categorization, personalized offers, and building on Mastercard's subscriptions control solution, which they introduced in 2023. than it also enables consumers to cancel, pause, and resume their subscriptions. So this was kind of based off a Mastercard survey, which found 73% of consumers expressed interest in a tool that would assist them in identifying, tracking, cancelling, or renewing subscriptions, with 60% of consumers trusting their banks to provide such a tool. So this is a really interesting solution. Obviously, I think it's going to be very well received, because anything that can help you track your finances, track your spending in a way like this is always going to be really useful. But I kind of wanted to use the story as almost like a jumping point to talk about just subscriptions in general. And I feel like, and I'd really love to get your guys' thoughts on this, but when it comes to sort of subscriptions as a payment, when we think specifically about obviously payments and subscriptions, I feel like subscriptions are kind of dropping off a little bit. And I would really love to know what you guys think, because I think we've got quite a lot of tools out here now that's all with like subscription management and helping you manage your subscriptions, helping you manage your payments, especially with, Cozy Lives and the current economic situation. Everyone's looking to sort of manage their spending a little bit better and track their spending a little bit better. So kind of subscriptions are coming into that. But I feel like people are falling out of love with subscription payments, and I really want to get your guys' thoughts on it, because I feel like I'm falling out of love with subscription payments. I think part of it obviously comes down to what is being offered via subscriptions, because everything comes in subscriptions these days, like cake, TV, God, even toilet roll you can buy on subscription now. And I feel like subscriptions were such the in thing when it comes to like making your payments and buying things and consumers buying your products and things like that. They were all the rage, throughout the pandemic and sort of even coming into 2021, because it was a nice little treat through your door and it made you forget about the horrible things that were happening in the world. But now it just feels like subscriptions really aren't as much of a big deal as they were, and subscription payments and paying for things via a subscription feels like it's falling down to me, and everyone just seems to be not so keen on them. And I feel like everything's just coming to an end when it comes to making these payments. And I think it's just a really interesting thing. So obviously this is kind of talking more about kind of the products that's being offered as well as the payment side of things. But I'd love to get your guys' thoughts. What do you think about subscriptions as a payment option? Do you think we're seeing people slowly fall out of love with them, or are they kind of stronger than ever? And the tools like Mastercard subscription solution really going to help with this? I mean, I'd love to know your thoughts. Tom, we'll go to you.
I think this is another case of maybe like oversaturation in the market. Like you said, everything is available on subscription now, and it becomes almost a bit of a chore as to, you need to manage your subscriptions. You need to be aware of all of the different subscriptions you have. You can get into a situation, I know I have in the past, where you've got so many subscriptions all coming out at different times throughout the month, and it just feels like, God, all my money's going because I've got all these subscriptions. I'm probably not even using half of them. It's quite easy sometimes to forget about the fact you have a subscription, and it's only when it hits your bank account the following month you go, oh yeah, I really should have cancelled that. I haven't used that for the last month. So I do kind of see the idea of, as the space gets so everything's a subscription now, it's a lot easier to fall out of love with them, and it is more of a chore now as to, I now have to manage all my subscriptions. And even with these number of new offerings that are coming to the front, I think it's a case of, it's still, for most people, they're just kind of doing everything manually. It is quite difficult to track sometimes. So as a payment method, it is quite annoying to me. One thing that I do quite like is like Amazon offer their sort of, you can do it monthly or you can pay for it yearly, and obviously that comes with a slight cost saving, although the saving has become less and less over the years, which is a potential offering that more people or more companies could offer to try and reduce the management requirement. I don't know. I think it's a weird time for subscriptions, like you said. But I think my main gripe is that you get a subscription with something, and they, over time, they just offer less and less with your monthly payment. Like we talk about, I think, is it Amazon Prime now? They, even though I'm paying for Prime through a subscription, they still, now they're throwing ads in. They're like, oh, you now have to pay extra to get rid of the ads. I think Netflix were considering rolling that out, or maybe they already have. I'm not too sure. It's a case of just feels like you're getting less and less for your money as well over time. And obviously it's a case of, they're trying to, better their profit margins during a difficult time, high interest rates, blah, blah, blah. We talk about all the time. But yeah, I think the earlier you got into subscriptions, the more you feel kind of ripped off by them now. It's like, oh, I'm getting much less for my money now. I'm still paying the same amount, but I get a worse or lesser service. So I think that's why it's really difficult to stay in love with subscriptions. And yeah, for me, definitely it's a case of I just want to minimize the amount I have now, and I only want the really essential services that I can't live without to be coming through subscriptions. Everything else I'm going to be cancelling.
Yeah, I think you've hit the nail on the head there. I think a lot of it is you just don't feel like you're getting as much of a deal anymore. And it's certainly like for the providers, obviously, it's great because you've got a regular income coming in. You know that people are going to be spending a certain amount of money every month. But from the consumer side of things, it is, I think, down to how much you're getting out of it. And I think when you kind of start looking at your spending and start trying to track your spending and kind of see what areas you can change to sort of make savings and make more of your money, subscriptions are going to be the first things to go, especially when you think about the things that you can buy on there. Like, it's let's be honest, they're not necessarily like essential services. They're nice and they're lovely things to have when we come to think about like entertainment or anything like that, but they're not like super essential. So it's just a really interesting space, I think, to be in, and kind of how this is affecting everything. But Francis, what do you think? What's your take on subscriptions and payments and things like that?
I think what annoys me the most with subscription services is that it isn't until you try and leave that you get a very good deal. I think that's what's really annoyed me recently. Is every single time I've thought to myself, do I need this? No, let me try and cancel it. They've gone, well, how about we just like cut it in half? You know, we'll save you tons of money. And I just think to myself, why don't you just offer that from the start? That would be. I think I get why they don't. I guess it's, you know, like you guys said, it's a profit thing. But from a consumer standpoint, it is so frustrating to be like, I'm paying something and now that I don't want it anymore, now is when you're giving me something that's going to make me think, do I still want it? And it's like, no, the thing is at that point, you're saying you don't want it anymore. It's not worth it. And I think brands, if they did sort of just offer that second deal first, not only would they probably have a higher user base because, you know, it's more accessible, it's more affordable. I just, it really gets on my nerves. And yeah, I think that subscriptions in general, I think they're great. Like, despite me just going on that little ramble there, I do think they're great and I do use a lot of them as well. But I think what Tom said was definitely right, is that if you're not careful and you're not sort of planning when they are and they're sort of spread out throughout the month, you really lose your money quickly and it becomes much, much more difficult to manage. And I think that is when people can struggle and that's when they can find themselves in very difficult situations financially. And of course, like, that's not the fault of the subscription service necessarily. It's the fault of the consumer for not having the awareness of when they're doing it. But I think that's another thing with subscription services that annoys me, is that they make it extremely difficult to change the date that you're billed, which involves either cancelling, which then would mean if you have a deal, you're cancelling that deal, or it would mean, it means that you have to cancel the deal, and then that just makes life even more difficult. And while I do see the merits of them, they're just awfully annoying at the same time, aren't they? But I'm still gonna continue to use them. That doesn't mean that I'm not. It's just annoying. Is what it comes down to.
No, you're so right. They can be super annoying. I guess it boils down to, if we're thinking about subscription as sort of like a payment method, that's always going to be great because we're always talking about like alternative payments and having different options to pay for things, and subscriptions being one way to pay for things, I think is always going to be there and is always going to be quite favorable. But at the end of the day, I think it is coming to a bit of a turning point a lot of time with consumers because, you know, as we've said before, consumer demand and consumer needs trumps everything. And if consumers start getting annoyed about payments and subscription payments and all that, then that's kind of going to kill it in one. But again, we'll just have to wait and see. But anyway, that brings us to the end of our discussion today. Thank you so much, guys, for bringing those articles. If you want to hear anything more about what we've talked about today or anything else from the fintech world, head on over to thefintechtimes.com, where there are plenty more news and insights over there. But very quickly, let's do what I learned this week. So each week we are learning so much new information and insights, being on the Fintech Times editorial team, that we thought it'd be fun to share that with our listeners. So Tom, what have you learned this week?
Well, following on from our little BNPL discussion earlier, and I mentioned Klarna a few times, this week I learned that Klarna has introduced open banking-powered settlements in the UK, which enables consumers to pay directly from their bank accounts instead of using debit cards.
Very cool. And Francis, what have you done this week?
This week, I learned that the UK government has published a draft legislation to extend payment service providers' time to analyse potential fraudulent transactions by 72 hours on top of the current business day they already have, which will be a great thing come October when banks and financial services are forced to reimburse, or there's going to be a requirement for them to reimburse consumers that have fallen victim to fraud. This will be a great thing to ensure that they do make the right decisions.
Awesome. And what I learned this week is that new data from Adobe found that because of the leap year, as well as increased use of buy now, pay later services, UK online spending reached £8.8 billion in February 2024, which is a 5% increase on 2023, which I thought was an interesting figure. But anyway, guys, thank you so much for joining me today. As always, it's been great to have the gang back together and talk about fintech with you guys, and I will catch you on the next one.
See you guys next week.
See you guys then.
Thanks for listening to the Fintech Times News and Views podcast. Don't miss next week's episode and continue the conversation using hashtag TFT News and Views and follow us at the Fintech Times.